All right, folks, let's get on a guest for the show. He has not been on in about, I think, a month. Last time we had him on was end of August. So very excited to speak to him again and get his thoughts on a variety of different companies, including Amazon, which is his biggest holding. Sam, what's up?
What's going on, man? How are you? It has been quite a minute.
It has absolutely been quite a minute. I'm very excited to talk to you. By the way, guys, is Sam's audio good? It's a little low for me, but I think it should
Ooh,
be.
hold up.
Yeah,
How about
maybe
now?
if you just. Oh, perfect. There you go.
Okay, good.
Good, perfect.
I'm about to crack open this C4 Energy right here because I'm an energy drink addict.
Are you a Celsius guy or no?
Used to be, but then I sold Celsius, and then I'm no longer.
You stopped drinking it because you sold it. Dude, people are so
No,
emotional about their stocks. That's hilarious.
I mean, I got to do my DD. Like right now, I'm doing lessons on Duolingo. I'm bullish Duolingo. Easy money's been made in Duolingo, but I'm using it to brush up my Spanish before I go to Spain next month. And I want to go to Nebius data center one time. One time I'm going to the data center.
I was about to say Nebius. Raise the audio. Sam, you still got to raise the audio. It's still too low.
Okay. How about now?
Guys, I think that should be way better. Should be way better. Good.
Yeah, we're good.
Yes, let me know. That should be good.
It says I'm sitting far away. I'm getting comfortable.
Okay, you should be good now. Okay, so let's get started with that. I got a lot of stocks I want to ask you about, but first of all, I mean, let's give you your flowers. Nebius, you're the person who gave us the thesis back at 30. I mean, here's my question. I want to get all your thoughts, but I'm going to ask a question first. Is Nebius a buy at 127?
Yes.
Okay, explain.
So I'm not going to say that it's like a buy to go all in. Like, I'm going to miss this right now. Like, it's going to keep going up. I'm going to miss it. Like that type of thing. Like, it's not an all in buy right now. As a matter of fact, I've never done like an all in buy for any of my stocks. I've usually built it over time, or maybe I got in a strategic point. But usually I don't like go balls deep on a stock when it's riding like this thing right now. But the reason why I say it's a buy right now for a longer term hold is because like we're just getting started in this whole the whole Nebius build out. I mean, they just signed up with a contract. What are they at, like $30 billion market cap right now? Maybe a little bit more of that, maybe about $40 billion. Microsoft contract is up to 19.4. So I mean, that is the only hyperscale they have so far, and they could sign up for more, and it's probably going to keep riding that up. But also the market is just diving deep into all of these stocks, man. Or mute.
Sorry. Do you think the data center expansion that we've seen with deals with CoreWeave, for example, and Meta, are you a believer that this is just real and it really is demand is outstripping supply?
It's very real. It's very real. And the thing is that there's a lot of like speculation that comes where it's okay, Oracle's paying or Microsoft's paying Oracle, and then Oracle's paying OpenAI, or whatever direction it is. You know, that big trifecta or that big triangle chart that everyone has that's been floating around Twitter for quite some time. I'm focusing more on the picks and shovels in this play. And the reason why I think it's going to keep happening is because regardless of whichever hyperscaler is going to win the entire race, they're all going to need the compute. I mean, Mark Zuckerberg's he's not going to stop investing. I mean, you were talking about before, like give or take 100 or a couple $100 billion, right? Like that's insane numbers to be throwing out there. But they're not stopping. Everyone is pretty much increasing their capex, and we'll actually get a good preview of that next quarter. But the spending is not decelerating, it's accelerating. People thought it was going to be a little bit of a digestive period, and that never came. In fact, it did the complete opposite. It accelerated beyond that. I do think that the demand is still through the roof, and I don't think that we've seen the big upheaval in terms of demand when it comes to inference. We're already starting to see that, but as enterprises continue to bring on more licenses for ChatGPT, whether it comes to Gemini and so on, they're going to need more inference compute. And that's going to be pretty much through most of the hyperscalers or whoever's hosting all these applications. And therefore, the demand's going to keep increasing. And with that, you're going to need to build out more data centers to fuel into this demand.
Yeah, I think it's a really logical piece of analysis that you just need more build out to deal with all this demand. I guess the bears are saying the demand isn't real because the ROI is not real. And that you have to either believe it or you don't at that point, right?
Yeah. Yeah, I see you're bringing up the CoreWeave chart there. I know there's like a lot of there's a lot of debate on like whether Nebius is a better buy than CoreWeave. I think that they've both kind of grown into different businesses per se. I mean, Nebius is Nebius is obviously my pick when it comes to both these sectors, because at the time when I bought Nebius, CoreWeave was very expensive, and a lot of it was already priced in. Plus, CoreWeave has client risk, right? Two of their largest clients account for most of their revenue, which is OpenAI and Microsoft. I don't think that's really going to go anywhere. I think they're going to continue to be clients for CoreWeave. But CoreWeave is mostly focused on providing that GPU workload and powering AI workloads. They do have certain data centers where they own the entire land and all that stuff. But most of their data centers are actually co-locations, and they're actually renting out the compute for the AI workloads, but not necessarily like you can spin up your servers or you can build all your applications here and so on. Like, it's mostly a rental for them. With that being said, it's probably a lot less risk since they do have major clients and enterprises as their clients. But when it comes to Nebius, we already know that its core business is around building data centers and providing the entire stack for an entire data center. You know, whether that is spinning up VMs, whether that's databases, AI workloads, which is what CoreWeave mostly does, or whether that's a different kind of hardware you want to provide, whether it's bare metal to software as a service or platforms as a service. But when it comes to Nebius, they also have those 4 other businesses. They have Triple Ten, which is the education suite. They have ClickHouse, which they own about 28% of, which is $6 billion valuation as of like beginning of this year. So chances are that entire sector, whether it's Databricks or Snowflake and so on, valuation and multiples have expanded. So that might even be $10 billion. So you have another like $3 to $4 billion there just for Nebius. And then you have AvRide, which a lot of people have heard about, recently partnered with Uber to deploy taxis in Texas. And we also have Toloka, which is one of its largest side businesses that it has. And their biggest clients, or one of their biggest clients, but 2 of their clients are actually Cloudflare and Shopify. And we already got the news that you just played the Bezos clip, right? Bezos Expeditions, which is his investment sector, is invested and part of the board of Toloka. But on top of that, the Shopify CTO is actually the chairman of the board of Toloka. So there's a lot of backing for this company that keeps coming. And plus Microsoft, $17.4 billion. NVIDIA still has a stake in Nebius. I'm not going to call top, dude. Like, I'm not going to call top in this.
I agree. Look, and there's a lot of smart people, including yourself, in this Nebius community that have continuously done due diligence on this. So I think it is a very, very fair assumption to say that there is growth built into the stock, especially if they can get another one of these hyperscaler deals like they got with Microsoft. Yeah. But before we get into Rubrik, because I know that's a big name a lot of people are curious about, and you got some DD on that. Your largest holding is Amazon. You just heard Bezos speak. I just bought in at 222. Here's my question. Why is the stock only up 1% year to date?
You know, I think a lot of it, the way the market moves right now is really in themes. And it also moves in terms of cycles as far as like what's winning and what's not winning. And usually whatever's winning will continue to win. We saw that in 23 and 24 where all these mega caps were up ridiculous amounts, which propelled the entire market up in the last couple of years. And now we're getting like a little bit of a widening of the breadth, right? You have a lot of small caps moving today. In fact, small caps led the market today, but we had this weird ass pullback in the middle of the day. Like, you saw that. Like, where did that come from? That was so weird that I can't, actually the little skepticism within inside me is like, maybe that was big money unloading a little bit, and then maybe we're going to get a pullback next week. I don't know. Who knows? Yeah. Anyways, it's only up 1% year to date because 1, they have to report earnings, but 2, Amazon also decelerated from 19 to 20% AWS growth, which is a cream of crop, down to 17%. I think that's going to accelerate. I agree with your thesis, with semi-analysis thesis, that it will accelerate. The problem is that mega caps are not in favor right now. In the last week, small caps have really taken the brunt end of the force in the upward direction. Robinhood, for example, that's more of a mid cap, I guess, at this stage. Maybe it's a large cap. I don't even know what the hell difference is like. I think we need to kind of shift up that category of small, mid, and large cap and mega cap. Agreed. The market's starting to get a little crazy. But like, it is picks and shovels right now. Data centers. NVIDIA is at all-time highs. All right. You have Nebius pushing all-time highs every day. You have all these data center bit mining companies going to all-time highs. You have Micron hitting all-time highs. You have ASML hitting all-time highs, and you have these other plays that the market's stiffened out that they're going to try to jump on the train for and catch up on.
Yep. I think that's fair. Do you think AWS acceleration end of year can get this bad boy moving? Or I guess what's the catalyst if you had to give one?
I think the catalyst is just you had your little bit of period where things were kind of slowing down, especially during the tariff situation where businesses were starting to contract their spend. But one thing that a lot of people aren't aware in terms of IT budgeting is that there is a flush of budgeting, a drainage of budgeting as it comes toward the end of the year. Let's say a company has like $50 million to spend because maybe they're underspending throughout the year. They're going to spend all that money for the end of the year, at least commit to spending all that money. So then that way they can write off whatever for the tax season, blah, 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 all that stuff. I'm not a CFO, so I don't know how, but this is a phenomenon that's been happening every single year. And we see this translated into the hyperscalers. They make their big contracts with a lot of hyperscalers out there before the end of the year so they could lock in smaller prices. They extend their contracts a couple years out so they could save like 5-10%. But like with a multi-billion-dollar company, 5 and 10% is a lot of money, right? There's a lot of things that happen in the last couple of years whenever it comes to cloud. And that's the reason why you usually see like that Santa Claus rally at the end of the year, especially with a lot of growth in software stocks, because that's what happens. They provide very good guidance. AWS doesn't necessarily provide guidance, but I think this quarter is probably going to be maybe like flat to a reacceleration in terms of AWS growth, maybe to 18-19%. But I think by Q4 and into Q1, 2, and 3, I think you're going to see that massive acceleration that semi-analysis is talking about.
Okay, well, I'm in it, so I hope that ends up playing out. And
yeah, and if I'm wrong, then I just won't come back.
Yeah, exactly. Okay, last question before rubric. Broader macro, are we toppy, Sam? What do you think?
No, man, I don't think we're toppy. I said it last time. We're going to 7,500, baby. We are going to 7,500.
You did say that. We are
good. Listen, I got this crazy Robinhood bet because you know on Robinhood you could bet on the terminal price of the S&P 500 by the end of the year. So I got this bet on. Oops. Oh wait, why isn't that coming up? Hold on. I got this bet right here on 20,000 plus contracts for 7,500 for about 74 to 7,600. This is still around my buy level.
Wait, how much did you spend on that? Like $100?
So I think that's I think it's like about $1,000, right? But
so if we do get to 7,500, you're gonna make.
Well, it's not going to be 100% yet, right? It's going to fluctuate. But I think once we break that 7,000 mark,
40x on that.
Yeah, I think I'm going to make maybe like a 20x at least in this. No, sorry, not a 20x. Because it's 5 cents. Maybe like a 10x at least on this thing. And then I'm going to start trimming, right? Because my belief is that we're going to hit 7,500 by the end of the year. But I don't think we're closing at above 7,500. I think we're going to close maybe around like 7,100 or even like high 6,000s. Like I think it's.
Wait, hold on. So you think we're going to run to 75, but it's going to close at 71 all in the next 3 months?
Yeah.
Huh.
I mean, you never know. I'm happy either way because both those targets are above here, right? So what are we at? Like we're at about 77.16, I think still because we closed pretty much flat.
The crazy thing is that
67.15. It can play out, dude. It's insane how much FOMO there is in the market. Like intraday, the ES or SP 500 future contracts drop like 30 or 40 points in a matter of an hour, dude. Like we are not, and the VIX is at 16. The VIX isn't even at 12 and we're at all-time highs. Like this kind of stuff, like people are scared, right? The VIX is at 16, big money's hedging. And the VIX is going up as the SP 500 goes up as well. So people are hedging. The 30-day implied volatility is going up, means people are buying puts on the market and they're hedging or they're buying vol.
Yeah.
That's the one that keeps happening, right? And I mean, I'm not speaking for people here because, wait, someone said Sam is bearish 8,500 by the end of the year. That's hilarious. I'm not, I know the people here are bullish as hell, but the people are also skeptical,
Oh, dude,
right?
we definitely have some bears
Like,
though. We definitely got some bears here.
so that what you just pulled up, the CNN Fear of Green Index, that's actually less of a sentiment indicator or more of a technical indicator. So I think the problem with this is that the VIX is 16, so it's really throwing this off. And plus, I think rates are somewhat down, and it's all the. If you look at all the 7 technicals on there, like, yeah, we're not going to be at all times. Like, what's actually kind of interesting is that this is kind of what happened last February, where people are like, hey, the fear and greed index is only at 54. It's only in the 50s, but we're at all-time highs. That means we can go higher. Yeah, which can happen, but it's a technical indicator, so we don't even know. But, it's out there. Institutions, in terms of large speculators, in terms of futures contracts for the CBO, or sorry, CME.
Yeah.
I forget the exact name, the
CBOE,
acronym for that.
one.
Yeah. They are not fully long compared to how long they've been. In fact, they got pretty damn short on the Qs recently, and they're still bearish as hell or short IWM, right? So I'm siding with small caps here, man. I've actually rotated a lot of positions in my portfolio to focus more on the secular themes and also more of like the small mid caps, because I feel like that's where you're going to see the brunt end of the force. And then after earnings, that's when you're going to get that affirmation like, hey guys, the hyperscalers are still accelerating, the party's still going on, and then you get that massive push up to like 7,500. And then, whatever happens there, I'm cool with.
Tom Lee's end of year target 7,000, Sam 70. Dude, the thing is,
that'd be awesome.
So here's the thing: if we make a run past 7,000, I think some of the fund managers are going to have FOMO that we've never seen before.
Oh, it's going to be brutal for them.
I mean, if we're at 7,000 like November, bro, could you imagine what they're going to have to tell their clients and they don't have any NVIDIA?
If I kind of think about it, I think 7,000 is in play for this month. And that would go around the time when all the hyperscalers reports, because next week is not the earnings week start. You do have some companies reporting next week. Applied Digital actually reports on Thursday, which is pretty interesting to see, because that's one of like the bit miners turn into hyperscalers, or not hyperscalers, into data centers. But the week after that, so what is that? That is the week of the 13th through the 17th. That's when you get the banks reporting. That's when TSM reports. That's when ASML reports. And then the week after that, the week of the 20th to the 24th, that's when like they all start reporting. And then you have the stragglers at the end of that. Maybe it's like Amazon is usually later on, and so on. That's why I think this is going to be 7,000 by the end of the month. 7,000 by the end of the month. FOMO in November, maybe pushing it up to like 73, 7,400, then 7,500 in December, and then dramatic pullback to maybe like high 6,000s, and then a little bit of a Santa Claus rally to push it back to like around 7,000 by the end of the year. That's how I think this whole thing's going to kind of play out. But I also think like, dude, this is not going to be an easy ride. Like it's going to be nail biting the whole way. Like, I'm not going to lie, when the market just like, when that floor fell in the middle of the day in the Qs today, I was like, is everyone just selling HIMs right now? Because look at the chart of HIMs. Like, what happened? I don't know what happened. The thing went all the way to like $59, and I was like happy as hell with my put credit spreads that I sold on it. And then I got greedy and didn't buy them back, and then I ended up closing them at a loss today. But like, I don't know what happened. There's no news out there. There's no news. It is just algos do what they're doing. Otherwise, I don't know. Maybe we hear something this weekend. The only thing that I heard about recently, the COO did leave Samir, but it didn't make a move after that, really. Like, nothing really happened. So I wouldn't really attribute that to anything.
Okay. So let's get into a new name, a name that a lot of people have wondered about. I think you've been long on this since about $30.
Can you share I just sent you a message I just sent you a text. There's a few links on there, but the first one, the rubric ER, open that one up. Okay. It's a tweet that I shared with the most recent earnings for rubric. And for the most part, I mean,
but before we even get into the earnings, what is this company? Like, why do you even?
All right.
Why are you even interested?
So everyone knows what CrowdStrike is. It's basically the endpoint security management for like your laptops, your actual front end servers, your mobile devices, and so on. That's what CrowdStrike focuses on. They're getting more into CM, which is like more of log management, but it's mostly focused from a security endpoint, but not necessarily an application endpoint like Datadog. So that's what CrowdStrike does. But like the valuation of CrowdStrike is insane, right? They're not going to reaccelerate anytime soon. They are full blast, all engines running right now, and they're killing it, right? But I feel like it's not really going to go anywhere for quite some time because all that's already priced in. You had the dip buying when it came to the outage last year, and everyone got back in, and now it's at $500, trading at like 25 to 30 times forward EV NTM sales. But that's what CrowdStrike does. Palo Alto is more of like network security, but also has like the broad end platform of building all these little players within it. They actually just acquired CyberArk, which is more identity management. One sec. So Palo Alto is more of a platform security, but also focusing on network security, kind of like Zscaler as well, right? And Fortinet. Fortinet actually is more on the hardware end, but they all focus on network security. So you have your client security, and then you have your network security, the two focal points of cybersecurity. But then you also have data security. Right. And this is the one that a lot of people kind of take for granted because it's like backing up all your applications in your database. That's the security. No, that's not true, because you have disaster recovery that needs to bring applications back, critical applications that need to come back up within minutes, not hours, not days, minutes. And what are you going to do if you restore an application and that application they restored after you already got the ransomware still has the ransomware? You're going to restore an infected application, and your company's got to bring it down again. The company's going to lose millions of dollars every single hour. This is a super important field that was not getting a lot of attention. The company is growing at like 51%. They are the leader in this entire sector. Okay. So when I say leader, I mean like there really is no competitive leader besides, I believe the name of the company is Coherence, but that's private. Then actually, I think they're kind of associated with NVIDIA, but that's the only competition there is. The other competition you heard of, Trend Micro, McAfee, Symantec, all that stuff, those are like legacy players in this entire field that are still building like antivirus packages and so on. They're still part of the game, but they are not the cloud native platform that's out there. And then of course there's Commvault, which is the giant. Yeah, Commvault is a competitor, which is a giant, but they don't have these close ties and the backing of these major hyperscalers. So I'm not saying that Commvault is not a good company. I'm just saying that they've been around for a long time. Their specialty was in system backups when it came to tape backups, and then they transitioned to cloud backups and so on. They're still there, but they're not actively growing like Rubrik. Rubrik is a much smaller company that is growing quickly, 51%, right? Their subscription ARR is growing just as fast too, which means that their forward-looking revenue is actually growing at a very fast pace as well. On top of that, dude, they're guiding for, they're already in positive free cash flow. They're guiding for what is that? Adjusted profitability by next year. Now I know there's like a lot of saying where like, oh, adjusted profitability means that you're taking SBC. Yeah, SBC is just the case for a lot of these software companies, especially when you're fast growing. You have to also be very competitive to get the best engineers. But that's what Rubrik does, and they have that Microsoft backing, dude. Like Microsoft is going to make sure that they succeed. You had pretty much
why do they have Microsoft back? Like investment wise, or as a
yeah, Microsoft has backed the investment of them, and also on top of that. The former chair of Microsoft is part of the board of Rubrik. And on top of that, their CIO used to be the CIO of the CIA.
Huh.
There's the FBI, I forget which three-letter agency it was, CIO, CIA. I got to look it up again. But yeah, they have that kind of talent in their company. And then they run into earnings at $100 a share, trading at high teen, forward sales. And then they pulled back to like $70 because it just wasn't good enough. Right? The market thinks they're slowing down too quickly at their early stage of the cycle. They think that they're not going to hit profitability and all this stuff, and it bounces back to around $82. I think that if you look at this company from like a longer term, maybe like another year or two out, the market will try to front run everything all over again, and Rubrik's going to be at 120, 125 bucks. You brought up Jason before. Jason is bullish this company from a fundamental standpoint and a chart standpoint.
Yeah. Is it a buy at 82? Do you have a fair value of around
yes.
Like 120?
My fair value for this by next year is about 100, 120, 125 bucks. It's probably going to overshoot if the market stays bullish on this particular theme, but clearly the market is not. Cloudflare, basically almost every single software stock has been flat this week. they're about different themes right now. But that's going to rotate back once they start reporting earnings again and so on. But it'll come back.
So you think they have a monopoly on data security effectively?
I don't think they have a monopoly. I think it's more of a duopoly or a polyop. I don't know what term that is, but they are fast growing, and in terms of most innovative, they're one of the two, but the only one that trades publicly, so it will get that premium. Commvault it's a great company by all means, but like they're not growing at 50%.
Is this one of your favorite SaaS names? Because we know SaaS has been relatively flat this year. I mean, let's check IGV. I haven't even checked it.
Yeah, so this is my favorite SaaS company. This is my favorite software stock right now. In fact, it's one of my only software stocks now because I did a little bit of a cleanup.
Oh, what'd you trim? What'd you get rid of?
I sold Snowflake.
Wow.
Yeah.
But you got a profit on that one. That one's still.
Oh, it was beautiful. It was like basically a double in like a year.
Yeah.
I sold MongoDB. I was buying that thing under $200, and then it picked back up. So these things can continue running, but I'm going to focus more on like the current themes right now, because I do think that the market is like ready to bid some crazy stuff up, and I do think the alpha is not in these companies. So I sold CrowdStrike after holding that for a long time. By this point, it wasn't even that big a position, so I was like, whatever, let me just sell it. I sold Snowflake, I sold MongoDB, and I added to a lot of positions too. And you already know I actually added Nebius at 109. Didn't think it was gonna go to the 130s that quickly, but I did a little flavor add over there. Yeah, CrowdStrike has been sideways, and I think the market is like, we need to rotate into certain names now.
All right, I have a couple questions, and then we'll do some rapid fire. Everyone can put a ticker in the chat if you're curious about Sam's thoughts on that ticker, and he'll give you whatever he has. First of all, just Hood. I mean, you've been long with me on this one. Like, thoughts on what we've seen this week?
I added at 119.
Okay.
Yeah, I added at 119. I didn't think it was going to run, but you saw that major weakness we had when the market got scared. It dropped to like the low 120s. Before that, I added though, when it was in like the high 110s. Because after that keynote, man, after that event, I was like, dude, this company. I don't want to be like that guy where it's like, this is just getting started. But like, dude, 24/7 futures and options, 24/7 crypto and options, overnight markets already. Soon they're going to have overnight options. They're going to have zero DTEs on every single stock you can think about. I don't know, man. Like, this is not going anywhere anytime soon. And I want to land myself in the best possible company that's the pioneer in this entire industry that's going to take the whole cake. And I think it's riding that sports contract. That guy that we follow on Twitter, he tracks all the sports contracts.
Juan, he's awesome.
Yeah. How could you be bearish this? This is insane.
I think that vertical itself kind of unlocked some more momentum for the company this week. So I agree. I want to ask about Iren real quick though, guys. Diddy got 4 years. 4 years. So for those
I'm sorry to
that,
laugh. I didn't mean to laugh, but like when you said Diddy got 4 years, I was just like,
I know that came out of nowhere, but that is
Diddy got 4 years. It reminds me of the Chappelle Show episode, man. Oh goodness, I love that show. All right, I know you wanted to. Oh, go ahead.
Yeah, Iren. When did you get into this one, and how bullish are you on this?
Yo, dude, I got in at $21, and I gotta tell you, this was a FOMO buy. The
Same
writing
with me.
was on the wall.
I bought at 28 because of FOMO.
Yeah, the writing was on the wall with this whole theme, and I knew it was going to continue. And the more I looked at it, the more I was like, man, I'm going to keep adding this thing, right? So I have a pretty decent size position because I added again at $39 recently. Not a lot, but I added again at $39. All shares. I'm not playing options at this thing. And the thing with Iren is that they have two existing large data centers. They have Horizon 1 and 2. Horizon's in Texas. Horizon 1's in Texas. They haven't disclosed where Horizon 2 is, but people are speculating that's also in Texas as well. And they're also building Sweetwater, which is a 2 gigawatt data center. That one's coming out. It's supposed to be partially built out by next year. And dude, that one is huge. Honestly, what Iren is doing is a lot different from the other Bitcoin miners, is because they are full on transitioning into into AI cloud. And what they do differently that the other players don't necessarily do is that they're all renewable energy. So their power is around 3 to 5 cents per kilowatt, which makes it operationally a lot easier, a lot cheaper to run all of these engines, right?
Right.
Also, the reason why the whole Bitcoin mining is turning into AI is because you can easily pivot this hardware to focus more on AI workloads versus Bitcoin mining. So like you can't just like turn off a bunch of AI servers because like, you know, you're not getting a lot of compute because the demand is always there. But you could turn off Bitcoin mining servers very easily and then repurpose them into AI data centers. But on top of that, a lot of these Bitcoin mining companies already are strategically located in certain certain areas where power is cheap, right? So if you have that, that means that they could power all these data centers in random remote locations where they don't need to worry about interrupted activity, right? So if Nebius, I'm not saying Nebius is going to have this risk, but if Nebius is running one of the largest data centers in New Jersey and that whole grid can't support all of it, someone needs to turn their stuff off, right? If Iren actually Nebius just acquired about 91 acres of land in Alabama. So they're already looking at this, right? Iren is building all of their stuff in Texas. I'm speculating that everything's going to be in Texas, including Sweetwater. In fact, I think Sweetwater actually is in Texas anyway. But there's a reason why they're going to these remote locations because they don't want to worry about the grid, right? So power is a bottleneck. Power is quickly becoming a bottleneck in all of this. But the reason why I'm focused on Iren is because they have that renewable energy factor. They're already a pretty good profitable company. They just became profitable last quarter, but they're guiding for continued profitability.
What do you think about the valuation? Is 13 billion cheap?
I'm not looking at today's valuation when I'm buying the stock. I'm not looking at it.
You got to have some sense of like where you value.
I mean, I could look at a chart and be like, this mofo ran, but I can't be like, oh, Iren trades at like a forward price to sales, because they're going to be growing quickly.
But do you think investors are overpaying for is the growth already priced in, or it's not even close to being priced in due to data centers?
I think that growth is, I think it's already priced in that they're going to have a major hyperscaler sign a contract with them, just like Google
Nebius
did just like Nebius with Microsoft, just like CoreWeave with Applied Digital and also Core Scientific, and just like Google with TeraWulf and CIFR. That's why I'm buying Iren, because they haven't had that deal yet. They're certainly getting priced like they have that deal, but they haven't gotten that deal yet. I think the market expects it. It's going to come at some point, dude. They're 2 gigawatts plus 2.9 gigawatts of capacity by middle of next year. Like, someone's signing up. And they're keeping it. I feel like it's already there, but like they're just keeping it under a leash. So we'll see. But I'm not so concerned about the valuation right now because one, I'm not a value investor per se in this particular thing, but also, you know, there's a lot of momentum in this company. I thought it topped out at 48, and look where we are today. We're above $50.
Dude, it went from 15 to 28 on earnings, and I bought it after the Nebius deal, thinking like, all right, I'm really buying it a bit aggressive.
Yeah, yeah. And
it is quite incredible. It is quite incredible. And again, I agree with you. Maybe valuation isn't the best thing to look at here if they do get a Nebius type of deal. Yeah. And I also agree with you that it's probably inevitable they get that deal. I don't know if the stock moves like Nebius after they get it, but
yeah, I don't think it's going to move like that. I think they're already priced in. But that chart's insane. I try not to look at the chart, and I try not to look at the RSI because that will scare the bejesus out of me. But a position that I open has become quite big, and let's just say I'm seeing swings in my portfolio that I did not see a year ago in terms of percentage. Like, it's getting a little wild. And I don't know, man. I don't know what to say. Like, when most of your portfolio, like, I think about 30 to 40% of my portfolio is in Nebius, Robinhood, Iren, and part of it's in CleanSpark, but also like some other names that are like very volatile. I have to develop a stomach because this is just going to get even crazier.
And I know you don't like volatility, so you've had to really develop that.
I have to get used to it, dude. I have to get used to it. So let's be thankful I have a full-time gig that covers the bills and everything. And then I hope I don't lose everything, but I'm going to be strategic. Like, I have a position in CleanSpark. I got in there like around $14, and I mean, the thing has the Bitcoin narrative, but also it has the option of switching into HPC if they need to. And I already mentioned that, the pivot and repurposing compute toward AI is very easy to do. The other way around, not so easy. So CleanSpark is my favorite miner out of the 3 miners, right, Mark? CleanSpark is my favorite. And they're also in a renewable energy fashion. But I think that Bitcoin has wings, dude. It has Bitcoin is running. Bitcoin is running. Our boy Tommy and Michael Saylor, they're doing things for us, man. They're doing things for us.
All right, let's get into some of this rapid fire real quick. Muckaby, thank you for the 50 super chat. Sam, what's good?
Dude, that guy's he messaged me. He sent me I don't want to say how much it was, but I'm like, can I have some? Like, if I made you money, like, invite me to your yacht or something. Like, you invited your boy to your yacht. Can I just go on can someone just invite me to their yacht? By the way, congratulations on the Substack.
Oh, I appreciate it. Muckaby says, you helped me stand strong on my Oracle earnings call options. You gave me about 615%. You are a legend. Dude, I think you and Couch were on before the day before Oracle. And
me, Couch, and Jose.
And I think I was like, all right, guys, what do you think? And I think
I was the only one who said it was
Couch and Jose were like, and I was like, well, and you were like, we're going higher, baby. And yeah.
It was the theme. It was a theme. I didn't know it was going to go up that much. I just thought that it was not going to be an option seller event to the upside.
Yeah. Agreed. All right, Sam, I'll get you out of here in about 10 minutes. Real quick, let me just put Sam's Twitter in the chat. Please make sure to follow him on Twitter. And
put up my YouTube link, because Chris and I just had a podcast the other night, and we talked about all this stuff ad nauseum. And Chris talked about the healthcare plays. UNH, man, that guy is doing it. I have to admit, I've never had to succumb to that much pain on any massively sized trade than he did. Like, he's the Michael Burry right now. Like,
I remember there was 3 weeks where he was down a lot, and he just got through it. He bought the dip, and now we're seeing some momentum. Oh, well, there you go. You got a little 450 super chat on your channel from Mr. Muckaby.
What? Oh,
look at that.
what?
He's making it rain in here, bro, on these Oracle.
You don't need to do that. You don't need to do that. Okay, I'm going to reinvest that back into the company.
No, buy more. He will be so happy if you buy Iren with this. This guy loves Iren. Just buy more Iren.
Oh, man. Dude, thank you, brother. I really appreciate it. I mean, I just think that this community is just awesome. It started this, and I'm going to ride the wave with everyone. I
love it. All right, some tickers. Well, let's do this one real quick. Grabby grab. What's going on with this one?
Dude, I just hold on. However, I am trimming my leverage exposure on it. Mostly because I got to take profits at some point. I already doubled it. I'm going to keep my shares, but like my leverage exposure, I'm looking to rotate back into shares when that rug happens.
Okay. BMNR.
Oh man, let's go, Tom Lee. Let's go. Look at that chart. That's like that's wild institution, chart. Man. That's institution.
Are you buying? Or are you already in? How are you thinking about this one?
Oh, I'm already in. I have to be honest. I am the worst in my ads to this company. Like, see the peaks over there. The peaks. That's what I add. That's what I add. It's the worst. I always come back, but like that's when I add. But yeah, I would like to buy more BMNR if I could.
Okay. Ader, thanks for the super chat. Sam once mentioned he was bullish on Unity. Sam, are you still bullish?
No, I sold Unity. I sold at around $45. But I got in like sub 20s and 22, and yeah, I sold.
Okay. Drone stocks, any thoughts?
Geez.
ONDS, anything like that?
I wish I got in this stuff. Stock Talk, right? Like, he's been preaching drone stocks for a while. Him and Jaguar. I wish I got in some of that stuff. And when I wanted to get in KTOS around $60, I thought I was late. I was not late. It's almost at 100. So, is what it is. You can't be in all of them.
Okay, so drones, you at least see the kind of
I see that tailwind. Yeah, it's happening. It's happening. It's only going to get bigger.
OKLO?
Oh yeah, no, I traded that one at like $78. And then it was like right around the time when right before Dan Ives got bullish on it, and I was adding to it, and I sold it all at like 145.
Okay. If you had to buy
But
one Max,
bullish.
if you had to buy one Max 7 by end of year, or hold one Max 7 from now till end of year, what would it be?
The AMZN, dude.
Amazon. Okay, that's your pick.
AMZN. But gonna give a warning. I might start trimming this at some point.
Well, you've been in for a long time, though.
Yeah,
so,
I've been in for a while, but dude, mid caps is where it's at right now. I'm not going to mess around. That's where the alpha is right now. It's time to get strategic with this market. You never know.
You think small and mid caps outperform large caps next year
by a wide margin? You saw it today.
Huh. You know, I'm not fully on board with that. I still think the rich get richer. I think the big companies, they continue to get bigger.
Did you see how many politicians got into mid caps lately?
Oh, Cleo Fields is the next Pelosi. Yeah. So yes, I did.
Yeah. Yeah, the blonde lady, right?
No.
Oh,
this guy. Dude, he got Iren and Open Door and Oracle.
This guy, this guy got an Iren, but it wasn't a crazy amount. Like some of these politicians, they get in for like, you know, maybe 20, 30,000, which isn't a lot for them.
I'm just impressed with
a lot of
picks.
money.
The picks to me is what matters.
I'm not impressed with the picks. These guys have everything to do with it. Did you look up that one with the Ashley something? She's part of the judicial system in Florida. She got bullish on Genius Sports. She's actually buddy with Pam Bondi, Attorney General. And Jaguar was saying yesterday that every single state in this country, I'm taking no credit for this research, this is from Jaguar Analytics. He said every single state in this country sent a letter to Pam Bondi to ban overseas sports gambling and betting. Huh. And if they do, Draftkings is going to bounce up hard.
Sorry, I just have one. Yeah, what do you think? Okay, so your argument here on Draftkings is as long as the competitors can't work in the States, that could help them.
I think this is overdone. The sell-off is
I think this got sold off because of the prediction markets on Robinhood this week as well.
Draftkings not in prediction markets.
No, agree. But like, I think the market's like, oh, are people going to go to Hood and Polymarket and Kalshi over Draftkings? Right.
I mean, I think it was less of Hood. Hood was like a catalyst, but I think the whole Kalshi thing that came out when they said how much they were actually doing in terms of sports contracts, I think the people at Draftkings got scared. But I think this and FanDuel, which is owned by FLUT, I think, FLUT, I forget the name of the company, it was FanDuel. I think that's all getting overdone. I think that this market is going to get bigger. And to be honest, Hood doesn't have parlays. Yeah, Nick Moss said it. Hood doesn't have parlays. They need parlays, but also it's prediction markets. The fees are way too high. I mean, imagine when Vlad turns off that 4 cents and makes it 2 cents because they start doing it in-house.
That's going to be fun. That is going to be fun. All right, Sam, I know you got to go, but I do want to bring on one guest who just joined backstage because I think he knows something, a little something about parlays. Ladies and gentlemen, it is Friday.
Let's go.
What's going on, guys?
Good
afternoon.
You
heard parlays, and your degenerate ass was like, "I need to talk about sports gambling." That's what's up.
Yeah, I mean, I was going to say, first off, you may have found somebody that's more bullish than me because if I heard correctly, Sam thinks we're going to 7,500. What's the time frame?
That is correct. End of year.
Wait, what was your target?
So I said 7,000 on December 31st. And I said 7,000 during April that I wasn't changing my stance. So I've been 7,000 for the whole year.
Well, Sam's more bullish than you. So
I love it. I love it.
Wait, my year-end target is not 7,500.
What is it?
My year-end target is like high 6,000, 7,000.
Oh. He thinks we're going to go to 7,500 in like November-ish and then come down by end of year, basically.
Yeah.
Okay. That would be fine with me also.
I'm fine either way. That's higher than here.
Fine with me. Love hearing that. So Draftkings is something that I want to own. I've done a lot of research on it. I have a very big problem with the gambling industry right now. And my problem is the big, beautiful bill because of the gambling code. IRS changes to I forget what section is with the gambling code. So Sam, are you familiar with what they did?
No, you're gonna have to remind me, dude, because I was actually gonna look into DraftKings this week, and that might be a little bit
Okay.
of an opportunity.
Yeah. So look, DraftKings is got an incredible interface, and I think that if you get a ban on international, it'll be great for them.
Yeah, no, I
Problem
agree.
is, so I don't know if you gamble or not, but let's just
It's
say
not gambling. I don't gamble. I
I'm going to
win.
use easy numbers. Okay,
Yeah.
if you put $1,000, now this starts January 1st, 2026. If you put $1,000 into an account, or you go to the casino and you keep playing, you're up, down, up, down, up, down, and let's just say you churn $100,000 worth of bets, okay, but you end up losing your $1,000, and technically you're only down $1,000. You went with what you came with. You end up playing for a long time. You had a great time. Hypothetically, if you racked up $100,000 worth of wins and $100,000 worth of losses, and you are crapping out, lose your money, technically, the new law, you can only deduct 90% of your losses against your wins. So you will have a phantom tax bill of $10,000 worth of profit that you never made. I think that that is going to significantly hurt the gambling industry.
And that's why you wouldn't own DraftKings.
It's not that I wouldn't own it, but it's going to be very hard to be very long gambling stocks, whether it's the casinos or the online sports books, if this doesn't get repealed, because you're going to have people like me who just don't gamble next year, because there is no reason for me to have a phantom loss that I have to pay taxes on. It doesn't make any sense. I'll go to the prediction market on Robinhood.
So a phantom loss, meaning if you lost 10 grand.
No. You're not losing 10 grand. Let's say you put $1,000 in and you make a bunch of $100 bets. And let's just say you make 10 $100 bets, right? You win 5, you lose 5, you still have a grand, or you have $900, whatever it is. And you keep doing that throughout the year. Each bet is an individualized bet that gets recorded. So you could theoretically churn that money before you lose it. And let's say you lose the 1,000. Normally, you would have no taxes because you didn't make any money, because 100% of your losses gets deducted against the winnings, and you actually lost $1,000. But in this case, you lose your $1,000, but because you have all those bets that you won on the Yankees, you lost on the Mets, et cetera, you can only deduct 90% of your losses. So if you end up churning it into 100,000 on each side before you lose your money, deducting 90% against that, you still have a phantom tax bill of 10 grand.
Who came up with that law?
It is packed into it. I can send you the link. I mean, I know you have access to Seeking Alpha. I put it in my last Draftkings article, and I put the link from, I think it was KPMG.
No, I believe you. I don't understand why would they.
No. But I'm just saying the KPMG did a 10-page specialty packet on this, and I put the link in my last Draftkings article, so you can read their summary about it. But I actually went through the big, beautiful bill. I went through the IRS tax section, and then I read the KPMG bulletin on it, and it is not good for recreational or professional gamblers. And I think it's going to hurt I think it's going to hurt all the casinos and sports books if this does not get repealed.
So Sam, can you help us? When I mean us, I mean literally everybody. Convince Steve to get some hood. Is this finally the reason why he gets some hood?
This isn't my hood. This is with sports betting.
No, but my point is, if more people go to prediction markets instead, that's bullish hood.
That is bullish hood. It's bullish hood for sure. I think it's also bullish for Kalshi as well, which obviously isn't publicly traded, and poly markets. But yeah, this does not work out well for FanDuel, for MGM Bet, for all those companies.
Steve, there's another reason to buy hood.
This is why I'm bullish Genius Sports, because they don't care who wins.
Yeah.
Amit, I'm sending it to you right now in your text, because I'm out of light right now. Gambling losses under the One Big Beautiful Bill Act Part 2 from KPMG. You'll have to find Part 1, but you can send this to Sam. They did a whole report about it.
I have Seeking Alpha. I follow you on there. I just didn't check out the article.
Okay.
Yeah, check it out.
But yeah, before you do anything with DraftKings, seriously look at that.
I'm looking at the chart in DraftKings. This looks like it might go down a little bit more, but the chart looks like it's oversold, way oversold. It just takes one catalyst for this thing to pop up. I want to do more research in this Pam Bondi thing with the overseas gambling, because I understand what you're saying, but regardless of whatever long-term fundamentals there are or headwinds there are for DraftKings, if you just get one single bit of positive news for DraftKings, it's going to skyrocket, or at least bounce pretty considerably. That's the only reason why I'm looking at it for like a mean reversion play, but not a long-term hold.
Oh, from a mean reversion, yes, you could absolutely pick up some capital on that, without a question.
Okay, Sam, let me get your thoughts on like 2 or 3 more stocks, and then we will get you out of here. Again, Sam, thank you for joining us today. Oscar, any thoughts on this one?
Oh no, I'm bullish. I've been in this since 14. Still holding. I think it's got more room to run in terms of a stock itself. But I mean, we just exited like really bad sentiment when it came to Medicare, and all their clients are basically paying with Medicare. So most of the clients, that's what they're actually focused on. And now that that's turned around, which is not going anywhere, right? You have Trump basically forcing Pfizer to start listing cheaper meds in Medicare and so on, all that stuff. Trump RX, which is going to be focused on that entire sector as well. Like, this has got a ways to go. Bullish.
Google?
Yeah, I mean, I'm going to attribute the flows for mega caps alone with Google. It basically doubled in a couple months. Might need to take a breather. Same thing with Meta, same thing with Amazon and so on. I think Apple probably has more ways to go.
Okay. So large caps, you're kind of basically saying, hey, they ran up and...
I'm not bearish large caps. I'm just saying that there's way more alpha in small and mid caps right now with rates coming down.
Okay. And last one for you is SoFi. What do you think?
Where's the chart?
There you go.
Oh, I don't know.
Are you in this one?
No, I'm not in it.
Oh, you're not. No, you're not.
I mean, I think rates are bullish for SoFi, and it's a mid cap now, and used to be a small cap. I think it's going to keep going up, but the market's... Oh, look at that. That's like right... You see that wick up there? That wick up there from July?
Yeah.
That looks like a... No. Up there, where it is right now. Yeah, that looks like it's going to... It looks like it might bounce.
Well, this is also...
strong bounce area.
Yeah, and it feels like it had to do with some of their credit ratings.
I think this is a bit overdone, but the momentum needed to cool off. The only problem is that anything bearish you see in terms of growth stocks, HIM, SoFi, a bunch of other names too, like if we go down just like 1 or 2%, these are going to go down. They're going to go down more.
Well, that's a really good point you bring up. SoFi, HIMS, obviously Hood, Palantir, Rocket Lab. If we get a 2-3% drop on the S&P, those are all falling 10-15.
I don't think they all will. I just think the losers are going to lose more.
But but none of them are losers. They've all won this year. But that's my point. Is like they were all so...
Yeah, no, the growth stocks get sold.
Yeah. Okay, final thoughts, NVIDIA. I know you don't own this one, but you're so bullish on the data center space. Are you at all interested in owning NVIDIA?
No. I got a lot of data center right now. They're going to benefit a lot more than NVIDIA.
Okay, there you go. Sam, thank you for coming on. Sam's YouTube and X right there in the chat. Please make sure to subscribe to him. Sam, also, dude, congrats, man. You started content creation less than a year ago, and you've just like jumped in. And you're dude, the amount of times I reference your tweets in the morning for like news updates and like I bookmark your tweets, like it's great. It's really good.
I'm sorry I haven't been on the last couple of days because I haven't been waking up at 5 a.m. So whenever I wake up at 5 a.m. my time, I always listen to you in the morning because it's nice to get those updates.
I love it.
Good stuff, dude.
Sam, check your Twitter. I just sent you the original packet from KTOS.
Okay, cool. Yeah, and would love to collab with you as well, Steve. Good
luck. Steve has a new YouTube, so you know.
I it's so funny. I have a lot of YouTube videos. I have Substacks and everything, but you two are like, obviously you two are killing me, and both of you guys have much better reputation than I do, longer too. But I just thought it was so funny how like both of you guys are in like 3,000-4,000 subs in your platforms. And you haven't released anything.
Yeah, but
all because of Amit.
No, it's not all because.
No, I mean it's good. It's good.
If there's a pre-existing audience, obviously it's a little bit.
No,
easier.
Yeah.
So that's. But dude, you're absolutely freaking crushing, and you crossed 20K on X, which is.
Thank you.
Not easy to do. Never mind, 24.6.
So. I'm 30K soon. 30K soon.
I love it. Thank you, Sam. Appreciate it. And yeah, we will catch you hopefully in like another 2 weeks. Hopefully we got to get you bi-weekly. Get your thoughts.
Yep. Let's do it.
All right. Thank you,
All right,
Sam.
later.
Later.
Later, Sam.